One of the world's largest financial institutions, Goldman Sachs, is stuck. According to a newspaper report, the bank has nowhere to put its clients' money, apparently a total of $170 billion. As interest rates are historically low at the moment and investors hunt for higher-yielding investments, many asset prices are on the rise, a situation that makes it hard for Goldman to find profitable investments. Here to discuss the matter is Peter Cooper, editor and publisher at ArabianMoney.net. Hi, Peter. Good to have you on the show. Tell me, what assets is Goldman Sachs talking about? Which asset prices have risen too much?
Well, specifically, the article yesterday mentioned distressed debt, and that means that the mortgage-backed securities which slumped during the global financial crisis are now seen as blue-chip assets again, and the bank cannot find assets cheap enough to deliver the kind of returns that it wants to for its shareholders.
Now, Goldman Sachs is not known as an investment bank to sit around and wait for better days to come. Obviously, they have the best minds working for them. They're probably thinking about new products to sell to their customers, to sell to the market, to make money with. What do you think they have in the pipeline? Are we talking about these toxic assets that caused the subprime crisis in the US again?
Not really. We're talking about more straightforward things, like today they've been recommending European bank stocks to their clients in Europe. It might seem a bit strange that they're doing that the day after they've appeared on the front page of the Financial Times, no less, telling everybody that they can't find investments worth investing themselves. Why can they recommend something to their clients when they can't bring themselves to invest in assets at the moment?
It's a strange situation, isn't it? Now tell us, if Goldman says prices are high, that means maybe we've reached a peak. Well, what does that mean? Prices go down again. Is now a good time to sell, maybe?
I think that's the message you would take from that article, very much so. If the world's brightest investment bank and the only one that actually survived the last financial crisis now thinks there's nothing worth buying, then clearly they're looking to sell. In fact, they said if prices don't improve, they may sell themselves.
If Goldman says that there's nothing to buy in the market, that doesn't necessarily mean it's true. What do you think? Which assets have a potential at the moment?
Again, you have to look at Goldman and say, well, if they're not buying, should I think that I'm brighter than they are? But I mean, in longer term, precious metals, I've been on this program before recommending gold and silver. Silver particularly looks to have a very good upside given the current financial conditions.
Hot money is flowing around the world, especially from low interest rates economies to high-yielding ones. How could that affect the Arabian countries here, the Gulf region, do you think?
We've not seen a lot of hot money coming in here. That's why our stock markets have been relatively flat. I mean, there was a recovery last autumn after Ramadan going through to November, but markets have come off again since then. And I mean, the whole problem is that the hot money is no longer able to deliver the return, even to justify the very cheap interest rates that it's being borrowed at.
And there we go again. It's Goldman Sachs' problem. Thanks for coming on the show, Peter.
Thank you.
Well, that's it from the business desk. Up next, Laura Buckwell is back with the news.